with people who are struggling to get into the market, they're looking at a price point that they feel that this is the kind of home they want to be in. Sometimes it's taking a step back and really looking at getting into the market as being the goal rather than getting into that really ideal home. Taking on something that's less expensive is actually a really good plan, because if you haven't owned a home before, like, you maybe don't fully recognize the cash flow that's going to be needed.
All right, Denise and Nicolee.
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 I know it's weird.
No, it's not. I like it. I think it's a different way. I mean, it's still spelled
Two
Nicole. Okay, there's a double E in there.
Double E.
Do you have what's it called? The Asante Gu?
Originally, that was the plan by my parents, but I grew up in Australia and they don't know what those are, so she took it off.
So they just threw away the Asante Gu. Am I pronouncing that correctly? The Asante Gu?
I think so.
Yeah, I think so too.
I don't have one, so I don't know.
Awesome. Well, listen, I'm glad you guys are here. A couple different things I want to talk about today. Three main things, and we'll kind of dive into it. So one, I want to touch on self-employed.
Yeah.
I think a lot of people do get themselves in trouble when they go into that self-employed realm, or they just don't know what to do, or their accountant is saying one thing and then their mortgage agent is telling them something completely different. Then I want to kind of dive into some solutions and some creative financing, and then your business. Like, how are you guys growing your business? What's next? Are you looking to scale? Are you looking to kind of maybe slow things down, and mindset? So Why don't we learn a little bit more about you guys? Like, who are you? What do you do? You're obviously in mortgages. True. So let's give we'll start off with you first, Denise.
So I'm a mortgage broker. Nicolee and I have worked together for 7 years. We have a business in Brooklyn. We serve clients across Canada.
Yep.
And I don't know.
Yeah. Well, you're literally like right down the street from me.
Yes.
Yeah. It's like a 2-minute walk from my house.
We see you walking in a non-creepy, just neighborly type of way.
I'm always smiling and walking.
Exactly. I love it. Your dopamine hit for the day out there in the sunshine when that's happening. Yeah. So we work as a team. When you work with Laframboise Mortgage, it is Denise and I and some other team members. So it's not that you have to talk to one of us. You can talk to anyone on our team. We really pride ourselves on a customer-centric approach. We are looking to make solutions for mortgages and home financing for our clients that oftentimes makes sense and has a common sense approach. Mm-hmm. We do specialize in self-employed financing, which is one of the reasons that we're going to be talking about that. And specifically for people people often come to us first because they've talked to their bank. That's the way that people were taught for many years to get a mortgage, and they don't feel that they're getting the service or maybe the loyalty that they expected from being loyal clients and customers in those banks, and they come to us. But the truth of the matter is we can help everyone. Like, you don't have to be self-employed. You don't have to not be able to qualify at a bank to come work with us. We have 58 different lenders we work with, so we have lots of solutions, lots of options, and can really work to find one.
Awesome. So why don't we dig deep into that then? Because I think there's obviously a lot of issues that come along when you are self-employed. Sometimes they're not told, when they're leaving that 9-to-5 job, they jump into that self-employed world, and then all of a sudden they come to you and they're like, what do you mean I can't qualify? Right? I've got $300,000 sitting here in my business because maybe their business is doing well in this corporation. How does that work? Can we kind of maybe just dig into that a little bit, like the whole mortgage piece of it and the accountant side of it?
Sure. Yeah. Well, I think there's 2 times where self-employed people are really underserved, right? So one is when they start being self-employed, because that's a new business. So to a bank, there's not a lot of consistency there. So it's understanding what lenders are going to look at your finances well. And I think the second piece of it is when you incorporate. Because what you often don't understand is, like, in the business world, oh yeah, I'm doing well, I'm going to incorporate, I'm going to, put money in a holdco, I'm going to use more strategic tax vehicles for my business. But what you're really doing at that time is drawing a line in the sand and saying, oh, that's not my money anymore, it belongs to the corporation. But then you go to try and apply for a residential mortgage, and they're like, that's not your money. It belongs to the corporation.
And I think that's where
Right.
people make the big mistake, right? Because they assume that that's their money, but it's
Yep.
not, because this corporation now is a separate entity.
Yeah, and so it is in a sense, because like, especially if you're the only owner of the corporation, you're the shareholder and so on. So there are special mortgage financing tools that we can use for that. There are special lenders who like that. There are special programs at our banks that like it, but it has to look correct. The documents have to look a certain way to be able to fit into those programs. So that's something that we specialize in, because we found it was a really underserved market. I used to do a presentation about why I refinanced my house before I incorporated,
Okay.
because it was my money, so I could qualify for a lot more than when I took that step to incorporate. And it's just things that people don't really think of when they're planning for their business. They also have to plan for their personal life.
So let's walk through that then. When you said that you refinanced your home, because I did the same thing as well too back in 2008, before I bought my first investment property, and I you guys might remember this, but I bumped it up to 40 years, and at the time, and I remember, I was just learning this stuff. I was trying to get into it, and everybody at work was like, "Why would you bump it up to 40 years? You're gonna be, taking 40 years to pay this thing off." But what it did, it also allowed me to look good on paper. Is this
Yeah.
where you're kind of going
Yeah,
with
yeah.
that?
Yeah.
Well, so if you think of that, like now we have the stress test. We didn't have that at the time, but you still had to qualify. But if you can stretch out your amortization, it makes your payments lower. And what that allows you to do is qualify for more financing with the same income.
Right. Okay. So you refinance it. You've got more income coming in, which now makes you look better on paper.
Yeah, because like the stress test is a factor of how much income's coming in versus what your expenses are. Says this is how much more financing you can qualify for.
Got it. Okay. What are some of the other big mistakes that you see a lot of self-employed people making?
Honestly, consistency is the trickiest thing for us, for lenders to look at. If a business is consistently performing and continuing to grow, it's fantastic. But if then the way that you've claimed your income as a self-employed person, like if you've done dividends one year, business income one year, consulting income another year, these are all tax strategies that are fantastic. If your accountant is doing these things for you and looking at your business each year and figuring out that really sweet spot of income versus tax, they're absolutely doing their job.
Okay.
The issue is when you haven't told them, hey, I'd like to pay the least amount of tax possible, but I'm also thinking of purchasing a property this year. They don't have all the information to do their job as well. Like too often people come to us and like, oh my gosh, my accountant did this. And we're like, no, that's exactly what they're supposed to do. It's just they didn't know that you were up for, your mortgage was up for renewal, or you wanted to refinance or do things around that. And that's the roadblock. The consistency piece is the roadblock for using a bank lender or an A lender. It doesn't mean it's a hard stop. It just means that we do have to then look at some of our different lenders who have a bit more, let's say, common sense around being self-employed to see
like that.
Well, Gary, like, honestly, I don't fault banks. They have very strict policies and they have very clear guidelines to their programs. That's why I don't work at a bank, because I don't want to have just one option for my clients, especially for our self-employed clients. We need to have more options and more lateral thinking to be able to place people. So if, anyone's listening and they're like, oh my God, I'm self-employed and I haven't been consistent for 2 years, it's not a no. It's not a hard stop, but that doesn't mean that you can't purchase something this year. It just means that you should work with a broker who has access to lenders who have programs specifically for self-employed people. But one thing that we do is work in hand with accountants. So if we have to do that, if they want to purchase now, and this is when we're doing it, and we put them in a situation with a lender that understands, but maybe that's has a higher rate or has some lender fees involved, we also make a strategic plan to see if the math makes sense to pay more income taxes to qualify with an A lender, or if, which we see a lot of, is like continue not to have to claim your income with all the different tax write-offs in your incorporation and move forward with that, and you're actually not the math is netting out that you're saving more money to not pay taxes and pay a slightly higher interest rate. And like, too often the conversation around mortgages is specifically and only interest rate, and that's not what you should be doing, especially as a self-employed person. When you're self-employed, you understand bottom line, you understand cash flow. If you can do something that is going to make that cash flow and you understand business expenses, you just see it as another business expense.
Yeah, I think so many people get caught up on the rate and they're not looking at the whole entire product itself, right? Also, you mentioned about common sense. Are we talking about, not to put words in your mouth, but like B lenders or other?
Yeah,
Okay.
like bank statement approaches, right? So,
Right.
and I see that a lot. I think that's probably the biggest mistake is that self-employed people come in and say, I want to qualify with my bank. Okay, cool. Like, how much in income tax is that going to cost you to do that? And is that going to offset the extra cost that it might be to go with a different lender that instead of using your tax documents will use your bank statements? Because when I bought my last property, based on how many properties I had and the stress test, I would have had to claim an extra $75,000 expenses
In your personal name.
2 years in a row.
Right.
So that would actually cost me $150,000 more. And like the rate difference between those two products is maybe, a couple $100.
And that's just going to a B lender.
Yeah. But it's I think because we're ingrained that I want a bank, well, maybe I don't. Because as a self-employed person, if I can qualify my bank statements and then keep more money in my corporation and pay less tax, I'm actually farther ahead. So with self-employed people, they need to look at their global savings, not just the interest savings.
I think it might be more of a mental thing, like a mindset shift, because they hear B and they're like, oh, well, I'm going down or I'm being downgraded. Yeah. It just means that, hey, there's just different options. And I think that's what, even if you go into the private space, it's different options, right? That allows you to get to where you're trying to get to.
Yeah.
Right. And not just look at them as buckets, but vehicles.
Yeah. And that's why with self-employed people, especially if you do change that mentality, it's absolutely mentality as seeing acquiring assets, specifically when we're looking at rental properties or investment properties, look at it the same way you look at it the rest of your business. You can't just think of, oh, this is my primary residence, I want to pay the lowest interest possible. Absolutely, your primary residence, that is the case. But with a rental or investment property, there's also tax benefits with your being able to write off the interest on the mortgage, on your investment property. You like having a higher interest rate is not going to hurt you in the same way because you can write off the cost of that against the benefit of running the rental property. So you're paying less tax there too. Right. So, definitely these are conversations with accountants. Like when you are looking to purchase a rental property or and you're self-employed, definitely let your accountant know. The communication is key with all of these things.
For sure. And so you also mentioned too that you will work with their accountant, which I think is incredibly important, right? Because, like you said before, like your accountant is trying to keep you in a lower tax bracket and you're trying to get them into maybe potentially their dream home or an investment property, right? So there's got to be communication, I think, on all three fronts.
Yeah, well, and having the right people in your corner, because it's not us saying, hey, this is what you need to do, accountant. Right? Hey, if you want to qualify for an A lender for this much, here's approximately what kind of income we're going to need to show, what you're going to T4 yourself out of your corp. Here's what we can do with a B lender. You guys go decide how much tax each one's going to cost you, and we'll figure out which one's going to save you the most money overall.
We're not looking to do anyone's taxes here, to be clear.
Right. But we do a lot of planning calls this time of year. Right? Yeah. Tax time, people are figuring out, okay, how much do I pay myself? Is that a shareholder loan? Is it a T4? Is it whatever it is, right?
Right.
We want to give them that information.
What about buying in the company name? So now they've come to you and they've only taken out $50,000 into their own personal income tax or their income, sorry. Could they just turn around and say, well, look, I've got this amount of money in my corporation. Can we not just buy it in the corporation?
So you want to buy in an operating company or a holding company?
I don't know. You tell me. There's a lot of different moving pieces there, right?
Well, so if you're trying to buy like a residential property in your operating company, that's probably not going to make a lot of sense. And while it'll save you the cost of pulling the money out to use for down payment, personally, it is going to have some additional costs in terms of maybe more down payment. Not as many lenders find that desirable, because the thing is, if you own a residential property in your real estate operating company, I don't think you can do that. But if you could, if something happens, like there's a legal issue or something in your business, then that property is now involved. So the lenders are not interested in that. Typically, operating companies are only for operating businesses, right? You can have a holding company would be for holding assets. So you could own properties in your holding company. And that's typically where we end up when we accumulate a lot of money inside a corporation and we don't want to take it out to use as down payment. A holding company can be built for owning properties. So that can be a more desirable issue. There, again, are only specific lenders who like that. Not everybody will do it, but it can be a really strategic thing to do to prevent you from having to take money out of a corporation and pay more tax on it.
Got it. Okay. Anything else on self-employed? I do want to switch gears, but anything else that you would say that is incredibly important for somebody who is self-employed or thinking about going self-employed that they
so
should
many things, Gary.
do?
I will tell you that the biggest pet peeve of mine is when people have a business and they don't take their business seriously. You have your income showing on personal bank statements instead of business bank statements. Like, if you want a lender to take your business seriously, you have to operate it as a business.
Yeah.
You have to be reasonable about where your money's going. You can't have a bunch of personal expenses inside the business account. Like, you have to operate it like a business.
Yeah.
And how do they do that? Is that like getting the right bookkeeper? Is that getting the right accountant?
Well,
It's simple.
yeah,
It's use a bank's
Business.
some sort of a business account, or it could even be a personal account, but only have business inputs and outputs going in that account.
Be serious about it. Like, keep your business separate than yourself. Like, this is your business. Like, even before, like we were talking earlier about being incorporated and that's not your money anymore. Treat it like that from the minute you start a business. Have business expenses and business income going into one bank account. It's really hard for us or anyone trying to set up financing to take bank statements that have really expenses that are clearly personal in there, and then we have to deduct that from the income. Like if I need to use your bank statements, I want them to be as clean as possible. Like, we're already not using your income you've claimed to the government. So try and keep it, the income coming in, hitting your bank account, not going under your mattress.
Right. And shoe boxes in the back of your car, realtors.
And it can be really tempting, especially if you are paid in cash, to then just turn around and buy your groceries with that money. But it doesn't help you to qualify for a mortgage.
Right. Okay. Awesome. All right. Let's switch gears. I want to get into a little bit of creative financing and maybe some solutions for people trying to get into the market, because it's not easy. And I'm sure you guys are seeing a lot of difficulty. A lot of people coming to you and they're like, what do I do? You know, even with their mortgage renewals as well, too. So let's touch on early inheritance.
Sure.
Or even is it reverse mortgage?
Yeah. So, we were talking about early inheritance. So it could be a reverse mortgage. It could be a line of credit. It could be something where essentially there's a ton of people who have parents who have a home. Either it's free and clear or there's very low financing on it. They have no intentions of moving. They want to help their kids someday, right? Oh, someday, kids, we're going to sell this house and we're going to give you each a couple $100,000. Well, your kids don't need help later. They need help now. If they can get into the market sooner, they can pay, mortgage instead of rent, and they can start accumulating equity in a property. So it makes more sense to help them now. We'll use vehicles like reverse mortgages, maybe strategic private financing, maybe lines of credit to allow the parents to gift equity from their home in a way that's not going to cost them monthly, so that they can gift money to their kids to help them buy a home. So
would that just be through a refinance, or is there another vehicle that you're using?
Yeah, it could be a refinance. It could be a second mortgage. It could be it depends on their situation, how they qualify, how much equity is there. They're all a bit different, but there's lots of different vehicles we're using. It's often the case, I find, when there's first-time buyers that they only think that their parents can help by co-signing. And sometimes that's actually worse for everyone, for the parents to be on title and for their credit to be impacted if the kid doesn't pay the mortgage or whatever it is. Or sometimes they're retired and maybe they don't help as much as you think they can,
Right.
this can often be a better solution for people.
And you know, the other thing as well, too, is when people co-sign, sometimes they don't understand what's involved in co-signing and that you are now on the hook and your credit now could potentially be or is on the line.
Well, or that you don't qualify. Then they come up for a mortgage renewal and they don't qualify to move lenders and get a lower rate because they co-signed for another property.
Or they want to do something else. Or forbid, they have multiple children who they're trying to help. They can't co-sign for everyone.
Right.
And we can only pick our favorites.
Yeah. Because
Of course we have favorites.
no doubt. Mine changes all the time.
Yeah.
But we often see people who maybe have a lot of investments as well, and their investment advisors like, don't touch that, and that's their nest egg. And we have these clients who have said, "Oh, my parents can't help. They own their home, they have investments all locked in, and they're retired." And it sounds like a hard stop, and they would really love to help, but they can't do anything. So that's when these solutions can come into play. For us, the way that we work is we have the first-time buyer client that we're talking to. And then if this is something that is tabled, we then have a separate conversation with the people who are considering becoming the co-signers or putting any kind of financing on their property, and they become our clients too. And we have a separate conversation with them to really ensure that they do understand the impact of doing these different things, because you're absolutely correct. People don't always understand. Parents and grandparents want to do what's best for their families, and they're like, I'm willing to do anything. I will sign whatever you need me to sign. And then don't recognize that doesn't happen with us, because we absolutely make sure that they know what they're doing. And with reverse mortgages, it's something that sometimes gets a bad rap. It sounds a bit predatory, and that they're going to not have their house and they're going to end up owing more than the house is worth. And in Canada, that's not the case. We are fiscally conservative in this country. Lending is highly regulated. We have a few different lenders that offer these kind of products, and they're very specialized. As part of a reverse mortgage product, in addition to having our expertise and working with us, you also have to have independent legal advice so that everyone fully understands what's happening. So I think that the bad rap and the infomercials that people see late at night about reverse mortgages isn't really the case here. And it's actually a very good tool for this strategy, but also for the aging population to stay in their homes.
Yeah, no, that's great. That's good information to provide. What about families who are trying to, like newer families, trying to get into the market? I think of my son. He makes great income, but geez, he just can't get in because of the price of these homes. Mm-hmm. What type of solutions are you seeing there? Are you seeing maybe like house hacking, where they've got there's 2 kitchens in the home, they can rent out the basement, or maybe they can live in the basement? Are you seeing some of that, and what other solutions are you seeing?
That's always been the case. I mean, it's more expensive now than ever, and I mean, the mortgage you need to qualify for is more of your income than it's ever had to be.
Yep.
Right. But even our first home, we bought it with a basement apartment so that we could use the income to qualify. I mean, the income doesn't help you qualify as much as you think it does, but it helps you stay in that house without going into debt.
Well, yeah, the cash flow of having, the rental component of a property is fantastic.
Yeah.
It's
and it's not going to be your forever home, your first one.
And I think that's actually key, Gary. With people who are struggling to get into the market, they're looking at a price point that they feel that this is the kind of home they want to be in. Sometimes it's taking a step back and really looking at getting into the market as being the goal, rather than getting into that really ideal home. Taking on something that's less expensive is actually a really good plan, because if you haven't owned a home before, like, you maybe don't fully recognize the cash flow that's going to be needed. Qualifying for a mortgage and having a mortgage is one aspect. We all know, owning homes and rental properties, that things go wrong, and you don't want to be pushed to your absolute maximum at all times just for the obligation. So resetting expectations. I know Denise's first property was definitely not her forever home, and nor was mine. We didn't look at it as being like, oh my gosh, I can see raising a family here. Sometimes that's not what you want to do. Like, say, hey, I'm getting into the market, and once you're in, it's a lot easier to stay in than it is.
That's so important. Just get into the market.
Yep.
Get into the market, and it's rather you're in than you're out.
Absolutely.
And stop trying to time the market. I think that's the biggest issue. Is like, well, you know what? Interest rates are going to come down, and I'm going to wait, or prices are going to come down, and I'm going to wait. And you're playing this waiting game all the time. You can't time it.
When we talk about getting into the market, like it used to be when we started that it was just in the GTA, drive until you qualify, right?
Yes.
You drive out of the city.
Thank you.
But honestly,
Thank
it's
you.
still so expensive when you drive far enough that you can still get to work every day.
Yeah.
That now we're finding a lot more people who will choose to rent where they live and then buy a rental property somewhere they can afford. Right? It's a way to get into the market. So we're buying, rental properties farther away from where they live, and you can find a really great property manager so you don't have to stress about it, but it's a way for your money to grow equity, even if you can't afford a house where you want to live.
I like that strategy.
Right?
Yeah, and you know what? People don't talk about that more. That's a great strategy where you're living in a city where you want to or need to because of your job, but you can't buy in that city. So then you go buy a rental property in a city where the numbers make more sense, whether it be Peterborough or Belleville or wherever. And now you're in the market, even though you're not living in that home, to allow you to build some wealth.
Yeah.
That maybe potentially you can maybe buy in the market that you live in, because now you found a beautiful spouse, right? And then now you guys can now buy a property in Whitby or Ajax or wherever that may
you
be.
sell and you've got a big down payment now.
That's a
because
great
that's
strategy.
gone up. I mean, when we talk to people at, the key things that first-time home buyers need to recognize: your first home will not be your forever home. It's not going to be great. Nobody likes their first home, and if they do, they waited too long to get in the market. And just that time in the market matters, right? If you look at anybody who has owned property for 20, 30 years, no one is saying don't buy property.
Yep.
If you go in saying I'm going to do this for 2 years, well, the timing might be against you, right? Whenever you buy, if you're trying to really, really time it, it's going to be a disaster. But if you plan to own something for 5, 10 years, it will go up in value over time.
The biggest mistake I've seen people make is when they sell their home and they want to buy another home, and then they wait because they think that they can time it. They're like, well, the market's going to come down. And I was watching City TV or CB or whatever, and they're saying that the charts all look like they're going up and it'll never come back down. Listen, man, I was looking at charts that looked like that back in 2010, 11, and saying this crash is coming. And if I didn't get into the market, I wouldn't have been able to, get into the market because it just kept going up.
Well, that's it. There's no, yes, prices have softened and come down since the absolute high that was a couple years ago, but they're still trending upwards. The trend is still, everything's getting more expensive. We feel this every day. I know everybody does. But yeah, timing the market is a fool's game.
It is.
You get in when you can get in.
Yeah. I feel right now, and again, I don't have a crystal ball, but it feels like there's a small window of opportunity for people to get into the Toronto market right now.
Yeah.
We just did a webinar on this where one of our clients bought a single family home for $1 million, just over $1 million, and converted into a 4-unit.
Smart.
And that can get you into the market. Yes, I get it. It's expensive to renovate and do all that stuff. But, if you want to get into the Toronto market and you're there, you're close to it, now is a good time.
Well, and you can't look at housing prices in a vacuum, right? So housing prices, they go up and down. Over time, they'll always go up. But you know what never goes down? Rent, right? And so you can either collect it or you can pay it. But it is always increasing. There's no world where we're like, oh, it's a great time to rent. It's going down. It's super cheap.
It follows inflation for the most part, right?
But no landlord is saying, you know what I've decided to do? Let's cut your rent by $500. It's never going to happen.
Right. Yeah, very true. What about renewals? What are you seeing right now that's happening, right? Interest rates are still high. There's millions and millions coming up for renewal this year.
Yep.
I'm sure you must be receiving phone calls on this. And what are you doing, providing solutions for your clients?
Yeah. So we are seeing that a lot, specifically people's rates right now, as of today, a lot of rates are in the mid 5s, some are in the higher 5s. And people are coming to us with in the rates that they were previously in the 2s and 3s. So one thing to know is that if your rate looks like it doubles, your payment doesn't actually double. Like, is one thing that people panic about. Like, I can't afford double my payment. That's not exactly how it's going to be. Different strategies around it. We can look at moving to a different lender and increasing the amortization as a short-term tool. I'm never going to tell a client we're going to continue each time we look at your mortgage renewal to increase your amortization. That is not a strategy. I do not want you to have a mortgage. I want you to be able to pay it off, but I also need to look at your cash flow. And if you are telling me that the new rate, I cannot afford this, we look at a solution that has a monthly payment that's going to make sense. If people were getting renewal notices and they're comparable to what we see in the market and they don't want to do anything, we're telling them to renew. We do not tell people to do things unless the math makes sense. So, and then helping people figure out the term and how long they should stay in that as well.
Right.
Refinancing is an option, especially because we are seeing a lot of people, and everyone knows that over the last while, life's very expensive. It's not just mortgages that are more expensive. Everything is more expensive. So we're seeing...
For you too?
Yeah. Right? Children are more expensive.
Yeah.
But we're seeing a lot of consumer debt in place. And even when we look at a monthly cash flow for our clients, even if it's the sticker shock, which is what it is, of seeing a higher rate, but then I say, hey, but you've been overspending or you've racked up all this debt and you're paying 20+% on your credit card and you've been paying that. Like, that's the interest rate for credit cards for a long time. People are like, understand that's what is happening. But when you're carrying a balance, you are actually paying that. And it does make sense to refi, and sometimes their cash flow is even better at that point.
So when somebody's come up for the renewal, should they come to you like the day before or 3 months in advance?
Yeah. So like you're always going to be like in the best position and have the best like bargaining power to be 120 days before your renewal date. You will have the most options. Something that is important to understand if you're moving to another lender. So if we are placing somebody with another lender in a rate decreasing environment, we have some lenders where we will lock in. So say you need a refinance and you have some debt to pay off and your mortgage renewal is June 1st. We have some lenders that will allow us only one rate drop no matter what happens in the market between now and then. And we have some lenders that will allow us the lower rate every single day without asking if rates drop, right? When you go directly to your own lender, your bank, is the person who works for the bank going to make sure you're getting the lowest rate up to and including the day of closing? Probably not. They're not paid to do that.
Yeah.
Right. So thinking about not just what your options are, but what can make them even better while you're waiting for that maturity date, and coming to somebody well ahead is going to allow you more options.
And I think what Denise is saying is that if you come to us 120 days ahead, we're not locking you into that rate unless rates go up. And people seem hesitant. They're like, I'm waiting for rates to come down. I'll talk to you when I'm closer to my renewal date because I think rates are going to come down. No, talk to us now. Talk to us as soon as you can so that we can have everything in place so we can take advantage of any of those rate drops. If you leave things to the last minute, like scrambling and trying to do stuff, it's not going to go well.
Yeah.
And understanding that we're doing a lot of shorter term fixed rates right now, 2-3 year fixed, right? It's kind of, it's the most common term right now, right? Before 5 year everything, now 2 or 3 years is about a reasonable spot between what the interest rate offer is and how long it's likely that rates will come down a bit, right? That's sort of the sweet spot.
Yeah.
They're based on bond yields. Those go up and down every day. So if you say I'm waiting, and then we say, okay, yields went down today, lower rates today, and then you go get all your paperwork and get it to us in 3 days, you may have missed that. Right? Like being organized ahead or being already secured at a lender so you can get the lower rate, it matters.
Yeah. Awesome. Listen, those are some great ideas, good solutions as well too. So I want to kind of move into that last segment, which is the future, your business and mindset. What do you guys do from a mindset standpoint? So in regards to the future and the economy, where do you see things going for 2024? And then should people be doing a variable or fixed? What are your thoughts?
So it depends, right? Like there's no set answer to that, right? If it's a rental property and you think you might sell, you think you might break, variable is probably always going to be the best way to go. they're getting better, and the variable may actually save you more money than the fixed. The fixed is more of that timing the market kind of thing. But there are a lot of people that really want a set payment. They really want to know what they're getting. For those people, I would look at a shorter term. But then for some of our first-time buyers who need to qualify as high as humanly possible to get that mortgage, they may need a 5-year fixed rate now, because that will allow them to qualify for more mortgage money. Right. So there's not a set answer. I mean, I have all these properties. I don't have the same mortgage on any one of them, because at any given time, one product, one offer, one rate is going to be better than something else.
Yeah, this is where you sit down now and you have that one-on-one conversation with your client and tailor something for them.
Well, and that's it, because, as Denise said, if you are planning on selling something, I'm not going to tell you to take a longer term fixed rate, because the penalties are going to be talk about sticker shock.
Well,
We're going to be like
more
disgusting.
Than what the interest is going to save you.
And we try to look at we do look at how the math would math out. If someone took a 1-year rate, and to be clear, 1-year rates are the highest rates that we're seeing right now.
What are they setting at right now?
Those are in the 7s.
Yikes.
Yeah. So usually when things are priced high like that, first of all, that's what the bond yields are looking like. And to take that rate for a short term, because if you're convinced that rates are coming down by the end of the year and you're going to save so much money, like how much does that rate have to come down for that actually to realize a savings? And it's a lot more than you think. And it doesn't perhaps rates are going to crash back down to the 2%. But if that's what has to happen for that math to make sense, I wouldn't count on it. And so then we look at a 3-year term, and if it was if rates were to come down all that much in the 1 year as well, and there's a cost to break, and we can estimate that. We can't tell exactly what the cost to break are, and how much would it have to come down for that to make sense as well.
Do you see an environment where interest rates could go up this year?
I hope not.
I'm honestly, mini heart attack. All of us are clutching our chests.
But does anybody ever really know? If somebody is telling you 100% this is going to happen,
no.
Run away from that person. Run.
Nobody has a crystal ball.
Nobody knows, right? Would I ever see free money in my lifetime? No, but there was a pandemic.
Yeah.
How did any of us know that was going to happen?
Right. And you know what the other thing as well too is that so many experts have been wrong over the last 3 years, significantly wrong. Oh, did you hit that little button there?
Sorry.
I think so. There's a little thing there where you can actually change it.
Yeah, she's cool right now.
Yeah. Do you see it?
Oh, yeah.
Yeah. Yeah, you just have to cycle through it. But okay, we'll look at COVID when it first started. Oh, the market's going to crash.
Yeah.
Do one more. Then when they said inflation was transitory, and interest rates were going to go up high, they shot up, and everybody now is like, well, interest rates are going to shoot down. I don't know. Look, it feels like it should, but now they're also talking about, we're not in a big rush to cut rates. And I think they were talking about 7 cuts this year. Now they're down to 4.
So most economists believe that this will happen slow.
Yeah.
Mm-hmm.
Right. And I know we all want it to happen fast, but most of us believe it will happen slow. It will take a long time.
And I think you need to do it slow, because if you do it fast and then people start pouring into the market, then you're going to get more inflation again. And then you've got
go back up.
You got this, volatile market happening. So you do have to be very careful.
Yeah. And I think that's based on the fact that we are kind of geeky and do follow all the economists and, take kind of an average of what they say, because they change their mind a lot. We are also cautious with advising anyone. We would never tell you what's going to happen, but always exercising caution and not expecting things to happen in the best way possible is insulating as well. You then aren't expecting something to happen, so you plan for it not to happen. If it happens, wonderful, and we can figure out the way mathematically that it makes sense to take advantage of those things. But I don't think anyone should be sitting on a renewal in the next few months thinking, hey, I can't believe my renewals right now. If it was just in a few months, the rates are going to be excellent at that point. I don't think that FOMO is necessary. You are working within the parameters you're working with, and we find the best solution for that, taking into account all variables and possibilities to find that sweet spot. And as Denise said, the 3-year fixed is kind of a sweet spot right now that we're seeing as of today. Could change tomorrow.
For A lenders, right?
For A lenders.
For B lenders, if we're talking self-employed people, we're talking about, okay, what's your business look like? What are you going to qualify for? How fast can we move you to A? Do you want to buy another property and we need to refi out so you qualify for more? So those may be 1-year terms, they may be 2-year, but you have to match it with their goals. It's not just about the numbers.
Yeah, no, that makes sense. What are you guys doing with your business? Are you guys looking to grow it? Talk to me a little bit more about the business and what's it like managing your employees, and how many employees you guys have right now? Because it's not always easy, you know, and there's a lot of work involved in it, but it's also rewarding as well too.
Absolutely.
Yeah.
I feel like it's pretty easy. Like,
Okay.
well, but I mean, we have great people, right?
That
we
helps.
tend to like, hire the attitude, train the skill.
Yeah.
Is usually our model. So we have, two full-time, 1 part-time, and then we have another person that's onboarding full-time. So we tend to follow the Kathleen Black model of like zone of genius. So if everybody finds what they're really good at and we can have them doing that the majority of the time, things go pretty smooth.
I love that. Yeah, I think that's really important.
Yeah, and it also means that when people are doing what they love coming to work, they love being part of a team, and achieving goals as a team is so rewarding. Like in the mortgage industry, there's so many people who are just working by themselves in a silo, and it can be really lonely and, kind of demoralizing. So we set up our business in a way that we can grow, and we can grow other people and offer like gainful employment in a supportive and fun environment, which I know sounds like an oxymoron with a mortgage business, but we have a lot of fun with our team and with what we're doing. We are never in a hurry to grow. Like, we grow organically. And as Denise said, as you find your zone of genius, sometimes there's aspects that you feel are not within that zone. So that's how we like to hire.
Yeah, no, that's good.
Yeah.
That's good. I think it's great to have that good team dynamic, have fun.
Yep.
Do you also allow them, in when they're working in their genius, to have some free reign to be leaders in that particular?
Gosh,
Yeah.
Like a great example of that. So we run everything strategic, like standard operating procedures and CRM and like very detailed processes. But last year I had somebody who's really good at processes, and they were like, hey, can I rewrite all of these to make them more detailed?
Awesome.
Yeah, of course you can.
Yeah.
Like, please go nuts.
Who's
like,
going to
do
say
whatever
no
you
to
do,
that?
right?
Yeah.
If you give your team the flexibility to really live in their zone of genius, they come up with amazing things you've never even thought of.
Right.
Yeah.
I can't agree with you more. Like, one of the things that I've learned over the years in the different businesses that I've created with other business partners is there's just certain things that I just cannot see. I don't have the skill sets. Maybe I can acquire them, but it's work. And I'm not working in my genius. And I've got somebody who complements me.
And it's going to take you more time to learn to do that and get to the expert level, whereas someone else already has those skills. And that's going to take you time away from your zone of genius where you can just excel already. It's not saying that you shouldn't know how to do all aspects of your business. You should have an idea of that. But
I agree.
recognizing your own self is really important when building a team. Like we love doing different profiling of like personality types and things like that.
I love it. Like the disc.
Yeah, I love a disc.
Yeah.
I would do it for fun.
I think it's important.
Well, because then you can learn how to communicate with people. Denise and I have different communication styles and different strengths between the two of us, which is wonderful because if we were exactly the same person, it would not work. And we complement each other well. And when we're hiring, we want someone who complements that as well. We don't need everyone to be the same person.
So are you having them do the disc analysis test, or are you just kind of figuring?
At hiring.
Yeah,
no, we do it at hiring.
Yeah.
Like we profile for if this is the role I'm hiring for. So say it's like a document specialist. Well, then they need to be an SC. So like we're profiling them, and we're not even interviewing people who don't fit that profile, right? Because the natural tendency when we interview someone is to really like somebody who's like us.
Yep.
I don't need somebody who has the same profile as me.
Right.
I need somebody who has the profile that's better at the stuff that I'm not as good at.
Yeah, no, I agree for sure. And then what about the mindset piece now? Does a team, like, is there huddles that you guys are doing?
Yeah.
Do you have them read books or podcasts, or what do you guys do from that standpoint?
Yeah, like Denise is a huge podcast consumer and often sends out the podcast she's listened to in the morning. She gets up and listens to a podcast.
You've shared a couple with me as well too that I've added now.
Yeah, and in terms of like check-ins, we do a lot of team meetings with different people who work with us. We have one-on-ones, and those are not check-in in the sense that I need to tell you any shortfalls. Tell me what you have enjoyed this week. Tell me what like you had some like curiosity around, and let's figure out if it's something that we can build your skill set on. Like, I really believe in developing our people and really hearing them as to what they're interested in. And by having one-on-ones, I find that it doesn't take time out of the workday. Like, you know, if you don't have those check-ins, people are asking, like, we love questions. We have a process for everything, but making sure everyone's happy and feels a certain way. I also try to get them to tell me, is there anything that I've lacked this week? Like, have I not given you something that you needed, or have I responded to you in a way that wasn't ideal for you? Because that's something that I need feedback on.
Right.
Yeah. I would say too, from the mindset perspective, I think some things that really hurt people's business are when they get, drama, ego, things like that. I always tell people, tell our team, I have no ego. Like, you cannot hurt me. If I'm doing something wrong, or if you find something I could do better, or if you find a better way to do something, tell me. I'm all in. Yeah. And when you're open like that, people are not stressed. People are not worried about making mistakes. We all make mistakes. Yeah. It's more just everything is an opportunity to learn, and every time we learn, we get better.
And we do a lot of learning as well. Like, within industry, we attend either in person or virtually a lot of different training opportunities, because that's really important. Like Kathleen Black we go to, and then training's so important to us that we did create a course for other mortgage people to do self-employed mortgages, actually, because as an area that was underserved. So that's our mentality, like always learning, always developing, and that's something we encourage from our whole team.
And just for everybody as well too, I mean, we've met many times now at the Kathleen Black event, and I enjoy it. I enjoy it because I'm getting to hang out with you guys and other people who are trying to grow their business and learn from incredible speakers on that stage to move them in the right direction or their business, right? And it's important to be in the right room with the right people.
Absolutely. Yeah, we do a lot of networking with other mortgage professionals too, which I find, I don't know how realtors are, but like mortgage people sometimes, or they're like, oh, you work at a bank, I don't want to be your friend. Like, we have friends everywhere. We can all help each other. We can all learn from each other. There's so many people who need our help. And if we can collaborate with other professionals in our field, we can all grow faster.
Yeah, there's enough business for everyone.
There is.
And, for us, if there's any mortgage people who are listening to this podcast and they are interested in talking with us, reach out. We'd love to meet you. We love collaboration. We love strengthening relationships, because at the end of the day, our industry is only as good as the people, and we want to be in an industry that has a great reputation, and anything we can do to help that, we're always open.
Yeah, no, that's great advice, because then you know what, maybe they're working on a file, maybe they're just not strong in it, they reach out to you and now you guys can collaborate on it, and then you realize, I actually don't like working on these type of actually files, self-employed, and then they can just send them to you.
Well, we talked about this, I think, that we launched that self-employed course. I think we've taught over 350 mortgage brokers through that course how to do this type of financing. And there's been quite a few of them that have said, I learned that. I don't want to do it.
100%.
Can you do this? Which is really cool, because it's not what we expected to happen. There's some other people that have really gone and niched in it, which is awesome too. Yep. It's so exciting to think that there's more self-employed people getting better solutions because we taught someone.
Yeah. And it's because you guys are coming from a place of abundance. Yes. And then that's what's important.
Oh, that's funny.
What's that?
That's my screen.
This is my year of abundance. Awesome. When did you put that on?
January 1st.
No way.
Yep.
See, there we go. Maybe we should title this podcast "The Abundance Life."
Yeah, year of abundance. And but it's true. Like there's enough in our industries, in yours and in ours, like real estate, mortgages, there's more than enough business for everyone. And if we are serving our clients and a client first approach, you don't worry about it. Like you are doing the best thing for your clients. More business will come. We're not going to steal your business and you're not going to steal ours. Like let's all work together so that everyone has a fantastic experience.
Listen, we're at the end here, but I appreciate you guys coming in and sharing your story and sharing your thoughts on the market and also solutions to what people can do to get into the market or to stay in the market if they're finding themselves in some difficulty. Any last words of advice from each of you?
I would just say when we're talking about the renewal clients, like don't be afraid to call and get a second opinion. If what you're being offered is the best option, that's fine. But like know that. Right. Because sometimes you'll get that piece of paper and it's got two choices and you make one and you didn't look at, 100 other choices that would have been better. Like, don't be afraid to ask around, call for a second opinion, and have confidence with what you're signing.
Yeah.
Okay.
That's what I was going to say.
Yeah.
But it is, and reach out early. Like, you're not going to be locked into anything with working with a broker right away. And removing the fear of the unknown is a big part. Buyers should not be out there shopping without a pre-approval. People who have renewals coming up should not be just automatically doing the signing because that might not be the best option, might be. But if you don't know, you don't know. Always find someone that you know, like, and trust, and have that team of advisors around you, because there are fantastic accountants, fantastic real estate agents like Gary, and fantastic mortgage people like us who want to be part of your team for success. We're not trying to fool you. We're not trying to just get business. We want what's best for you.
Awesome. Listen, I appreciate your time. How can people get a hold of you if they want to learn more about you or work with you?
LaFramboiseMortgage.ca.
Yeah.
Awesome. We'll put that in the show notes. And thank you guys very much for being here today. I appreciate it.
Our pleasure.
Awesome.
Thanks for having us.
Thanks, guys.